Well, welcome everyone to Internal Audit Skills Training Without Travel, presented jointly by AuditNet and Woodington Training. This webinar is part of the AuditNet Training Without Travel series. The subject of today's webinar is Fieldwork. I'm Jim Kaplan, founder and owner of AuditNet, and I'll be moderating this webinar. Joining us today is Bill Woodington, principal of Woodington Training, who will cover Fieldwork, as I said before. Let me have Bill introduce himself and give you a brief overview of his background, and then I'll cover some of the housekeeping items for this webinar. There's also a couple of slides in there, one for myself and one for AuditNet that you can read at your own leisure. Bill?
Yeah, thank you, Jim, and welcome to everyone. Another webinar today, and our topic is Fieldwork. I worked 22 years at Wells Fargo in the audit group, and the last 18 as head of learning and development for Wells Fargo Audit and Security. Teaching a series of classes. I left Wells Fargo earlier this year, and now I'm out on my own delivering internal auditing seminars and professional development seminars around business writing and leadership. But much more. We'll have our contact information at the end of this today. If you ever need to contact me, I'd love to come into your organization and provide training, but we'll talk more about our contact information at the end. Jim?
Thanks, Bill. And before we begin today's webinar, I need to cover some housekeeping items, so let me provide you with some of that information. Just a reminder, this webinar and its material are the property of AuditNet and its webinar partners. Unauthorized usage or recording of this webinar or any of its material is strictly forbidden. We will be recording the webinar, and if you paid the registration fee, you will be provided access to that recording within 2 business days after the webinar. Downloading or otherwise duplicating the webinar recording is expressly prohibited. We kindly request that everyone fill out the brief online evaluation questions that you'll see at the conclusion of the webinar. Your feedback is very valuable, so please take a minute or two to complete the survey. In addition, because this webinar qualifies for CPE credits, we will be putting up polling questions in compliance with NASBA rules. Those answering the questions will receive their CPE certificate by email within 7 to 10 business days. Note that this applies only to those who have paid for today's webinar, so if you want CPE and you haven't paid, then go ahead and answer the polling questions, and then you can always pay after the fact. You will have an opportunity both during and at the end of the webinar to ask questions. Submit your questions during the presentation via the chat window at the lower right-hand box on your screen. Simply type your question and press return to send it. Any question we're unable to answer by the end of the webinar will be answered via email directly within 48 hours. As the moderator, I will be launching the poll, showing the results, and monitoring any questions. In addition, if GoToWebinar stops working, you may need to close and restart. You can always dial in and listen and follow along with the handout. If you're a paid attendee, you will have received the handout earlier this morning. So at this point, I'd like to turn the floor back to Bill and get on to today's topic of Fieldwork. Bill?
Thanks again, Jim, and again, welcome to everyone. Fieldwork, I mean, if I could pick one topic in internal auditing, this is the bread and butter of what we do. The 4 phases of the audit process: planning, fieldwork, reporting and wrap-up, and follow-up. Obviously, most of the audit team are involved in the fieldwork stage, and really all of the audit team when it comes to work paper review. All of this is obviously where we do our work. The bread and butter of what we do, and so where are we going today? We'll kind of review a few things that we've talked about. Those of you who have attended the risk webinar we had a few weeks ago and the internal auditing basics webinar we had 2 weeks ago, just to get us back on the same page, I'll review some basics that we talked about there. Then we'll jump into fieldwork. We'll talk about work papers. I'll show you examples of work papers today. We'll talk about audit evidence, what constitutes good audit evidence. And we'll end today talking about control weaknesses, specifically issues and recommendations. All right, this should be a great day. Where would you rather be on a Friday? Let's talk briefly now about internal control, and as I said, reviewing some of the information we had presented previously. Remember, in one of our previous webinars, we talked about control terminology, the difference between control adequacy and control effectiveness. Control adequacy is the internal control properly designed. Control effectiveness is the internal control working as intended. All right, control adequacy and control effectiveness. And control adequacy, typically we're looking for in the planning phase of the audit process. And now today, here in the fieldwork phase, we look and test for control effectiveness. If you remember the example I gave a few weeks ago in our webinar, where one day, again, I worked at Wells Fargo for many years. One day I was on a vault audit, and the control that I was going to test was the opening procedures over the vault. Now, when I was planning the audit, the business partner represented to me that the vault is under dual control. It took two people to open the vault door. One person had the combination, and one person had the key. So now in Fieldwork, that looked like a great design. Again, control adequacy in the planning phase. The control design is dual control. And to me, that sounds like a great control for mitigating risk with regard to losses in the vault area. No one person could go into the vault and steal money. Well, now in Fieldwork, again, we always test for effectiveness. So I actually showed up one day and watched them open the vault. And it did take two people to open the vault door. I noticed one person had the combination and one person had the key. And I was about to go back to my laptop and type that the control was effective. But before I did that, I asked the business partner this question: do you have any spare keys to the vault? And he said, absolutely. And I said, where do you keep the spare keys? And then he showed me they were all in this unlocked drawer. So obviously, whoever had the combination, when somebody wasn't around, could get into the unlocked drawer of keys and open the vault door. That's an example where a control is adequate, well designed. On paper, it looks like a great control. But now in Fieldwork, when we see if the control is actually working, again, testing for control effectiveness, the control was not effective. Well, just to get you thinking about this, here's our first polling question today. Jim, do you want to open this up? What does control adequacy refer to?
Okay, control adequacy refers to which of the following? A, is the control working? B, control ownership? C, control design? Or D, monitoring? We'll leave the poll open for approximately 1 minute, so please cast your ballot. And then we will close the poll and we will share the results. We have about 3/4 of you that have voted, so we'll leave it open for another 10 or 15 seconds or so. Give those last few folks an opportunity to cast their polling response. And we will go ahead and we will close the poll now. And it looks like the majority said control design.
Great job, everyone. That is absolutely correct. And now that's in the planning phase. We look at control adequacy. Let's look at our next polling question. What is control effectiveness?
Okay, control effectiveness refers to which of the following? Is the control working, control ownership, control design, or monitoring? Again, please take some time, record your vote. Votes are coming in very quickly on this one. I think people are feeling a little more confident. We have about 90% that have voted, and we'll leave that open for another 15-20 seconds or so. Remember, if you are expecting to get CPE today and you have paid for the webinar, you must respond to the questions. And we will go ahead and we will close our poll now and share the results. And it looks like almost everybody said, is the control working?
Great job, everyone. Again, in Fieldwork, we test for control effectiveness.
Okay.
Well, let's talk about types of controls. Again, if we're testing for control effectiveness in Fieldwork, there are preventive controls, controls that prevent something bad from happening, if you will, and detective controls, controls that detect something bad after it has already happened. And I guess one of the reasons I'm showing this slide is if you know the type of control, it can help you decide how to test for effectiveness. Remember a few weeks ago in our risk webinar, we talked about to have risk, you always must have probability of the event happening and the impact of the event happening. You can never have risk, whether it's in your personal life or professional life, unless there's both probability and impact. Chance of loss and the loss itself. Preventive controls typically reduce probability. I mean, you could argue this. I remember this was on the CIA exam once, and you could say, well, it also helps for impact, but overall it usually prevents the chance of something happening. Detective controls typically reducing impact. So if you have risk, and you know you must have probability and impact to have risk, and you know that risk is high because of probability, and the business partner has preventive controls in place, and preventive controls typically reduce probability, you probably want to test preventive controls in fieldwork. Same thing, if risk is high due to impact, and the business partner has detective controls designed to reduce impact, you probably want to test detective controls in fieldwork. Both types of controls, preventive and detective controls. In our previous webinar, we looked at IIA standards. These are engagement standards now related to fieldwork. And remember that you can always access the current IIA standards on the IIA website, www.theiia.org. And these specifically are the standards related to fieldwork. We'll talk more about these here in just a few minutes, specifically 2310, where we talk about audit evidence. Well, I don't know how many of you had an internal auditing class in college, but many colleges are using the Lawrence Sawyer book still, even though Dr. Sawyer passed away a few years ago, in their internal auditing curriculums. And I just pulled this out of the Lawrence Sawyer book on really what is testing, field work. What do we mean by testing? Well, remember what I said at the start today. We're testing control effectiveness. We're testing to see if the control is actually working. In fact, when I worked at Wells Fargo, we had automated work papers that were called test documents. Again, we're always testing control effectiveness in field work. A little bit more about testing, and you can see here the types of things we look for: validity, accuracy, compliance with regulations. The controls are working as designed. And as you see at the end there, simply put, testing determines whether something is as it should be. And what is that? Again, are controls effective? Are they effective in mitigating risk? Are the controls actually working to mitigate risk? Testing always. And I know I'm going to be repeating myself in this webinar today. I believe in repetition when you do training. But always remember, in fieldwork, we're testing for control effectiveness. The design of the control should typically be evaluated in the planning phase, control adequacy again, control effectiveness in the fieldwork phase. Well, different ways to test controls. I mean, the example I just gave about the vault, observation, is one testing technique. Observation typically has some limitations. Even though I was there watching them open the vault, they could be doing things differently just because I'm watching them. I'm sure having an auditor there would make them somewhat want to please the auditor. So there are some limitations. I'm not saying you should not do observation, but you might want to combine it with other testing techniques that you see listed on this page here. We'll talk a little bit about questioning, interview skills today, much more so next week. So if you do have time, I very much encourage you to attend the assertiveness training next week. We will have a segment on interviewing skills in that webinar. Analysis we'll talk about a little bit later today. Verifying, and the old auditor adage, trust but verify. You can trust what they told you is true, but you always want to verify what they told you is true. And I've heard this from many people in other audit organizations, including regulators, that one of the big mistakes auditors make is they are too trusting. In other words, the only audit evidence that is apparent in their work papers is a verbal representation from the business partner. You always need to substantiate a verbal representation from a business partner with other types of audit evidence. Hey, Mr. Business Partner, how do you open your vault? Well, we open it under dual control. And the mistake auditors often make is they'll go back and type the vault is under dual control. Well, what did you do to verify what they told you was true? Did you observe it? Did you do other testing techniques? We'll talk more about this as we get into this today. This is just to kind of pique your interest. Let's look at some work paper quality issues. So really, when you're done with your work papers, and I'll show you some work papers today, you always want to make sure you've answered the who, what, when, where, why, and how questions. In fact, I've always felt over the years, and again, I've been in internal auditing for 22 years, our best auditors are the ones who are naturally inquisitive. I mean, they're just not satisfied unless they have the answer to the who, what, when, where, why, and how questions. And that's certainly what the work paper should reflect as well. I'd like you to focus, though, on the 5th bullet down where it says tell a story. Let me explain something. In the assertiveness training, and when I teach it in the live classroom, and I just taught it last week for an IIA chapter, we do a little exercise, and you might want to try this sometime in one of your staff meetings. I do it around interview skills, but here's the basic exercise, and it just takes a couple minutes to do. Get people into pairs, and have one person be a storyteller and the other person be a listener. Be sure you instruct the storyteller to only use 2 to 3 minutes. Keep it short. It could be something funny. It doesn't have to have anything to do with work. It could be a funny story from childhood, anything. Instruct the listener that they are not allowed to talk. They can just listen. They are not allowed to take notes. They can't do anything but listen to the story as it's being told. When the teller is done telling the story, now the listener is allowed to speak, and the listener's challenge is to tell the story back to the teller as accurately as possible. Remember, they couldn't talk, they couldn't ask clarifying questions, they were not allowed to take notes. When the teller says they're done telling the story, the listener must be able to tell, or at the best, at his best attempt, his or her best attempt, to tell the story back to the teller. You will be amazed at how many little learning points come out of this with regard to work papers and interview skills in general. In other words, how difficult that is to tell the story back without taking notes. You need to take notes when you're doing your audit work, when you're interviewing business partners. The difficulty of telling the story back when you're not allowed to ask clarifying questions. You must be able to ask clarifying questions. And basically what this whole little exercise brings up, and this is kind of how I end the exercise, is you need to be able to tell the story back in your work papers. Well, back to who? Back to the auditor in charge, back to the audit manager, back to the regulators, back to external auditors, back to any third-party person so that they would come to the same conclusion you did based on the work that you provided in the work papers. Anyway, our assertiveness training next week, I hope to see you all next week. I think you'll find that interesting as well for your personal life and your professional life. Lots of work paper quality issues. Again, I won't go bullet by bullet. One thing I should mention about this slide, though, be careful in the amount of background information you put in a work paper. We had a problem at Wells Fargo when I was there, and the regulators criticized us a number of years ago by, they would look at our work papers. And remember, the work paper should really just constitute the evidence you have that proves if the control is effective or not. What did he say? All I'm saying is your work paper should really just contain the audit evidence, and we'll talk about good audit evidence here in a minute, that proves that the control is either effective or not effective. The control is either working or not working. One of the problems we had at Wells Fargo is we had a lot of background information, like here's what this process is all about, blah, blah, blah. If you have a lot of background information, put it in a different document. They can always, a third-party person can always go to a different document if they want more information. If I want to look at a work paper, I want to know specifically how you satisfy the objectives of the test and how your evidence either proves or disproves the effectiveness of the control. Well, let's talk about audit evidence. Now, if you do take the CIA exam, 4 basic criteria for audit evidence. In other words, audit evidence must always be sufficient, competent, relevant, useful. I can't tell you how many times, I don't know if there's ever been a CIA exam that does not ask questions related to these 4 criteria in one form, shape, or another. So just a little heads up, you want to be fluent in the definitions for sufficient, competent, relevant, and useful. And that's what we're going to look at next, and be able to apply those definitions to your daily audit work. Well, let's look at sufficient first. Factual, adequate, and convincing quality audit evidence ensures the scope of the work addresses the control being tested. Sample sizes, so statistical sampling could come in here, selected adequately represent the population being tested, ensures conclusions are supported by factual information. I mean, this is pretty obvious. Do you have enough evidence here that satisfies the objectives of the test, that proves the control is effective or not? Is there sufficient evidence that a third-party person would come to the same conclusion you did based on strictly what's in your work paper? And I'll come back to that. I've already talked about it several times, but I'll come back to it more as we go through this today. Maybe the most important is competent evidence, the best evidence possible, gathered from the most independent source if possible. Doesn't rely solely on oral or verbal representations. Remember, trust but verify. Well, what are examples of competent evidence? I looked at an original document, not a copy of a document. I watched them open a vault. I didn't just take their word for it that the vault was under dual control. The best evidence possible, reliable, competent evidence. Okay? Sometimes they'll switch the word reliable for competent, but it's the same thing here. The best evidence possible. Now, relevant evidence. Basically, does it relate to the objectives of the test? I mean, I remember one time, and we have a QA department at Wells Fargo in the audit group, a quality assurance group that audits the auditors, makes sure the auditors are doing the right thing. So by the time the regulators look at our work at Wells Fargo anyway, we pretty much have already identified the things we're doing well and the things we need to work on. Well, one time I noticed our QA team, I was talking to the head of QA, and he said, you know, Bill, here's an example of a work paper that has good audit evidence. I mean, it's sufficient, it's competent, but it just isn't really relevant. You know, even though it's an original document, it just doesn't, it's not really relevant to the objective of the test. Sufficient, competent, relevant, and finally useful, helping the organization to meet its goals, helping the organization to mitigate risk, and helping the organization be successful. Well, Jim, let's open up our third polling question today, a little bit on audit evidence. Audit evidence consists of all of the following except which one?
Okay, and the 4 choices are sufficient, competent, relevant, or defined. I do remember when I was studying for the CIA exam and remembering the acronym.
Yeah, that's a good way to remember it.
Mm-hmm. Okay, we've got 75% have voted, so we'll leave it open for another 15 or 20 seconds. See if we can get more people to vote. This should be a relatively easy one. And we will go ahead and close our polling now. Poll is closed, and 95% said defined.
Good job, everyone.
So the acronym is SCRU, sufficient, competent, relevant, and useful.
That is right. Well, a little bit more on audit evidence before we look at some work papers today. You know, nothing really earth-shattering here. And again, those of you who did pay for the webinar today, you'll have all of these handouts. And remember, you can always register and pay for the webinar afterwards to get all of the handouts that we're going through today, and the CPE credit as well. But I talked about professional skepticism a little bit. Again, the who, what, when, where, why, how, and all audit evidence should be approached that way. As I said earlier, I think our best auditors, and the ones that I've seen most that uncover fraud, are the ones that are basically inquisitive in nature. In that third bullet, fieldwork is simply gathering audit evidence. Gathering audit evidence, why? Again, to prove if the control is working or not. And the second to the last bullet, litigation. I mean, sometimes legal evidence is required. Our work papers have been subpoenaed in the past. You always want to make sure that they stand on their own, as I said. Any third-party person would be able to re-perform the test and come to the same conclusions you did if you were the auditor who originally performed the test work. Different nature, I guess is the best way to put it, of audit evidence: physical, testimony, documentary, analytical. I can tell you documentary documents are the most common form of audit evidence. And you know, the testimonial is like the interview skills that we'll be talking about next week in our webinar. And I just want to say this now, and I will mention this next week, but the biggest problem, the most common problem, especially people who are new to internal auditing make when they go to interview a business partner, I'm looking at testimonial here, is that they ask biased, closed-ended questions. What did he say? The most common mistake auditors make when they try to gather verbal representations from a business partner is they'll ask a biased, closed-ended question like, hey, Mr. Business Partner, you would never just let one person open the vault, would you? I mean, what's the business partner going to say? He knows the answer you're looking for. He'll say, no, of course not. Instead of the opened, unbiased question, tell me how you open the vault. I don't know what he's going to say, right? Asking biased, closed-ended questions is the most common mistake auditors make when they interview business partners. Much more next week when we talk about interview skills. Analytical review. I worked in public accounting for 3 years, Touche Ross, now Deloitte & Touche. And a big test that we did in public accounting was comparing a balance of a general ledger account this year to the balance last year and looking at, is it basically the same? And if there were wide fluctuations in the balances of accounts, we would ask the business partner, why? What's your explanation? It's a basic analytical review. And I can tell you, when I was in public accounting, if the balances were fairly close, I would say pass, immaterial. The difference is immaterial. But when I came into internal auditing, I couldn't get away with just passing on things as frequently as I did in public accounting. I oftentimes needed other audit evidence to satisfy the objectives of the test. Is the control working? Is the control effective? Clarity and conciseness of thought and expression in your work papers. We started the webinars about a month ago with writing to achieve results, and I just taught the class in Florida this week, face-to-face for a client. And I talked about one of the big problems people have in their audit work is lack of clarity and conciseness of thought and expression. You know, those of you who did attend the Writing to Achieve Results webinar, remember we said the problem most people have when they write is they write from their own point of view. They write the way they think. They don't think about the audience when they write. We talked about the difference between writing from a point of view, what we don't want, from the writer's point of view, to what we do want, writing from a viewing point, the reader's point of view, and your results. If you want to get results when you write, you want to write from the reader's perspective. Work papers should be clear, concise, complete, verifiable. Watch what you put into work papers. Remember, they should stand on their own. Any third-party person comes to the same conclusion you did. The control is effective or the control is not effective. And that's really what I've been driving home in this little segment here. Remember, whenever you're done or one of your audit team is done testing the effectiveness of a control, always ask yourself this question. The question you see on the slide here: would anyone, a regulator, an auditor in charge, an audit manager, the chief auditor, the external auditors, anybody come to the same conclusion as the auditor who did the work? that they would be able to re-perform the test work. They could re-pick the sample of items if they wanted to and look at those sampled items. And they could retest those items, and they'd come to the same conclusion that the auditor who originally did the test. The control is effective, or the control is not effective. Always be sure you can answer this question yes, when you're done with the work paper. Well, just a summary now before we get into kind of our next little topic today. Trust but verify. You trust what the business partner tells you, but you always verify through other testing mechanisms, as we looked at there, to make sure that they told you what they told you is true. Don't clutter up your work papers with background information. And we'll talk about issues and recommendations towards the end of our webinar today, but typically you should give them to the business partner in writing as you identify them in Fieldwork. The business partner then must respond back to you in writing with their corrective action plan. And typically both the issue and recommendation and the corrective action plan should go into the final audit report, the final written report. Work papers are confidential. Typically, regulators may look at them, but we know that in advance. They shouldn't just show up at your door and say, let me look at your work paper. Certainly, we shouldn't let business partners look at our work. If I was a business partner and I wanted to commit fraud, and I knew what the auditors were looking at, yeah, that would help me. This is how they test. They're not going to test this, but they do test this. And again, our work papers are confidential. Regulatory exceptions, this is just a word of advice. If you're doing regulatory testing, compliance testing, if you come across a control weakness in your regulatory testing, again, you want to alert your in-charge auditor and probably the audit manager immediately. And you may not know the significance of the regulatory violation. If it's a significant regulatory violation, you might be able to protect your organization under attorney-client privilege type guidelines. So, the last bullet there, and you don't have to do this, but this is just a word of advice, I would recommend that whenever you identify a regulatory control weakness, you would identify it as an exception to corporate policy, okay? Any type of control weakness, whether it's compliance related or not, is always exception to corporate policy, because I'm assuming your corporate policies are driving you to comply with regulations. Why do I say this? Because when the regulators do look at your work, I don't think I'd want to have red flags all over that we've got management's not complying with Reg Z or Reg B or Reg E or whatever the regulation might be. And also, as auditors, we may not be experts as to legal ramifications with regulatory control weaknesses. We may have to get the legal department involved, and that's a whole nother game. So you don't have to take my advice on this. I know this is pretty much our approach at Wells Fargo, that whenever we identify a regulatory violation in the work paper it would say exception to corporate policy. Management is not complying with record-keeping requirements related to credit or something like that, even though we were testing for Reg B or Reg Z or something like that. When you do your work, and I mentioned this in our previous webinar 2 weeks ago in the Internal Auditing Basics webinar, you need to have good business knowledge. Remember the question I asked you in that webinar a couple weeks ago? What's the very first thing you should think about when you're assigned an audit project? Most people think risk. Well, I need to understand the risks in the business. And, that's a good answer. Don't get me wrong. We talked a lot about risk. But the first thing you really want to ask yourself is, what's the business? What is the business? Do you understand the goals and objectives of the business, the key strategies, the regulations that impact the business, the technology the business uses, goals and objectives? What is the business? Their products and services, how they deliver their products and services, and then what are the risks that could prevent them from being successful? And what are the best controls that could mitigate those risks to help the business achieve its goals and objectives? What's the business? Again, these are just kind of a summary of some of the things that we've talked about previously. Again, I'll show you a few work paper examples here in the webinar today. In the last bullet there, you should be alert to indications of irregular or suspicious activity, fraud again. But remember, even if you look at the IIA standard related to fraud, It's not expecting you to be an expert in this area. It's in the normal course of your work. Would you be able to identify problems? Would you be able to identify red flags of fraud? That you wouldn't pass on it. If nothing else, you get other people to take a look at this. Is this a problem or not? I had an auditor on an audit one time. I think it was her first audit. She came to me and she said, Bill, I know I'm brand new here, but I'm looking at this reconciliation. There's all these reconciling items associated with this general ledger account. It just doesn't look right to me. And I took a look at it and I said, it doesn't look right to me either. And we actually had a fraud. Just because she raised her hand. And you know this. You pass on something, it could go years before it's detected. Be alert to the red flags of fraud. I would always keep the auditor in charge informed of any scope issues. Any third-party person will always go back to the in-charge auditor and ask for his or her rationale for why you scoped something out or why you included something in a scope. I mean, I was on an audit project at Wells Fargo one time where we had an auditor who was new to testing the effectiveness of a control, and this person wasn't sure whether they should do this test or not. So they asked the person sitting next to them, another auditor, not the in-charge auditor, you know, I noticed in the last audit we didn't do this test. Should we do it? And he said, well, you know, I don't think we do this test. We didn't do it last time. Nah, don't do it. Well, the in-charge auditor then, when he reviewed her work about 2 weeks after that, and I think it was the last day of field work, asked the auditor, why didn't you do this test? And she said, well, you know, this other person told me we don't have to do it. Well, yeah, we got to do it. And we're on the last day of field work. The point here is you always want to clear scope decisions with the in-charge auditor. If you're the auditor doing the testing, you always go to the in-charge auditor if you're not sure with regard to scope. Well, let's take a look at some work papers today. And I put this under the heading Work Paper Documentation Guidelines. All right? So I'm not saying this is the only way that you can do work papers, but I think it's a good way to do work papers. And what I kind of want to do is jump back and forth here for just a minute between the PowerPoint and some actual work paper examples here. Again, in this particular PowerPoint, in the test document itself, you should have a risk statement and you should have a control statement before you get to testing the effectiveness of the control. What is the risk associated with this area of testing? What controls has management put in place to mitigate the risk? And now here in the work paper, what we called test documents at Wells Fargo, let's test to see if the control is actually working. Let's test to see if the control is effective. So again, just to jump to an example of a work paper here for just a second, this is and again, I'm protecting confidentiality here. I just dummied up a work paper so you could look at this, but this is typically what a test document looked like when I worked at Wells Fargo. We used Lotus Notes in our work papers. And at the top of a test document, now remember, we're calling our work papers test documents. Why? Because we're testing the effectiveness of a control. And at the top of a test document, we would have the description of the risk, as you see there, and the control that the risk, and the control description, the control that is designed to mitigate that risk. And I would recommend you do this because, again, any third-party person should be able to understand the related risks as well as the control, and ultimately, again, how you tested the effectiveness of that control. Top of the test document, a risk statement, and a control statement. Now, testing the effectiveness of the control itself. And by the way, before I move on, I'm just going to go back for a second. I want to say one other thing about risk statements. A well-written risk statement can help you identify the controls that should be in place, to mitigate the risk. And as we said in our risk webinar a few weeks back, it helps us sell our recommendations to management. You go to a business partner and you say, hey, Mr. Business Partner, you're not reconciling your general ledger account. And the business partner may come back and say, well, I don't care. I don't have time. You never cite a policy to sell your point of view. I'm not going to say, well, don't you know there's a policy that requires you to reconcile? No, because they could still come back and say, I don't care. I don't have time. No, I'm always going to sell the importance of the control based on risk. Here's what can happen if you don't reconcile. We just had a $7 million fraud. You need to reconcile. A well-written risk statement can help identify the controls that should be in place and help sell your point of view, sell your recommendations to the business partner. The control statement, a well-written control statement, can help you assess adequacy in the planning phase and help you design audit programs to test for control effectiveness. Risk statements and control statements at the top of the work paper. Now the body of the work paper itself, the objective statement and the testing steps themselves. Remember, 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 you're always testing for control effectiveness in fieldwork. Your objective statement should be stated in terms of evaluating the effectiveness of the control and assisting the business partner in helping to mitigate risk and achieve their objectives. All right, and again, we'll look at one here in just a second. The steps themselves should drive the auditor, who's ever doing the work, to gather sufficient, competent, relevant, useful evidence, just what we were talking about. All right? Driving the auditor to get the best evidence possible. I go back to, again, so that any third-party person could re-perform the test and come to the same conclusion with regard to the effectiveness of the control as the original auditor who performed the work. Back to our test document for just a second here. I'm going to jump up here to show you an objective statement so you can see this here. You see there under the objective heading, and again, I'm in a work paper now, an example of a test document. Again, just what we talked about, what should be in an objective statement. Again, evaluating the effectiveness of the control. But look at the example there. To determine whether the business continuity plan, backup recovery procedures, and testing effectively ensure timely recovery of operations in the event of service disruption. Well-written objective statements talk about testing control effectiveness. The testing steps themselves, again, as we talked about in the actual test steps results section, this is where we do all of our audit work, should direct the auditor, as I said, to sufficient, competent, relevant, useful information. You know, use words in your test steps. If you're the one writing the audit program, like verify, recalculate, observe. I mean, don't leave the auditor open guessing what he or she needs to do to test the effectiveness of the control. I think the more specific your test steps can be, the better. Here's some examples of actual test steps, okay? And again, I just kind of dummied up a test document, and you don't have to read all of this here. But again, remember, if you've got access to the recording, if you purchased the webinar today, you can always go back and take a look at this. But again, driving the auditor to get the best evidence possible. We'll talk about the X's here in just a minute. Back to our PowerPoint. In the work paper itself, there should be a scope section that identifies the source of your information and the scope. Source of information, who did you talk to? Who are their titles? Where did you get the information? You know, any third-party person, regulator, in-charge auditor, audit manager, anybody should be able to look at your scope section and know how you as the auditor set out to accomplish the objectives of the test. What? Anybody should be able to look at your scope section and know how you as the auditor set out to accomplish the objectives of the test. Just to show you this in a scope section here, I'm just going to jump up to the scope section here of a test document, again, of a work paper. Again, names, titles, team members talked to, dates of documents, reports reviewed, name, titles of team members the documents were obtained from, sampling information typically in your scope section, always. All right? You don't want to clutter up where you actually do your testing with this type of information. If you have this information in the scope section, you don't need to repeat it in your testing section of the document where you actually test the effectiveness of the control. Remember, any third-party person should be able to look at your scope section of a work paper and know how you set out to accomplish the objectives of the test. good audit evidence. That's what we're looking for in the testing section of the work paper. Again, in that example I showed you in just a minute ago, the steps results section of the work paper. The attribute testing, this is just a recommendation of mine that I would recommend if you can include like an Excel spreadsheet or something. If you're the in-charge auditor, you can set this up for the auditor who will be doing the test prior to Fieldwork, so that the auditor in this Excel spreadsheet, it has columns for each attribute that you're looking for. Let's say you are testing reconciliations. One column might be for timely preparation. One column might be prepared by someone who doesn't make entries to the account. Reviewed by someone who is different than the preparer. I mean, you have attributes for each area of the reconciliation control. So the auditor doing the test can look specifically for those attributes and document his or her work on the Excel spreadsheet. Now, what happens when you identify a control weakness, exceptions and issues, the last bullet there? Well, let me just jump back to the work paper for just a second and give you just a word of advice here. Again, this is not a standard. It's not an IIA standard, but it is definitely a recommendation of mine. Many audit organizations will flag control weaknesses. So you're the auditor doing the test. You come across a control weakness. You flag it with a red X. In other words, it jumps out at anybody who looks at this. If I'm a third-party person reviewing the auditor's work, I can see immediately we had problems in 3 different areas here, X1, X2, X3. 1 of 45 loan documents were not being placed in the proper file. That's X1. X2, 5 of 45 loan documents were not properly approved. And X3, 10 of 45 loan documents were missing collateral information. In other words, whenever you identify a control weakness in the body of your work paper, you flag it somehow. And many audit organizations use this sequential numbering of X's to identify each control weakness they've identified in that area of testing. And you'll notice here also, not only does the auditor identify the control weakness, but they make a call initially as to its significance. In other words, in X1, 1 of 45 loan documents were not being placed in the proper file. Well, how significant is this? The auditor's saying it's an isolated, immaterial exception. In fact, it's probably something I'm not even going to tell the business partner about. I'm not even going to report it verbally to the business partner. It's totally isolated. I'm not going to waste the business partner's time with this. But X2 and X3, I mean 11%, 22% of everything I saw was a problem. That doesn't sound isolated to me. I'm definitely going to at least report it verbally to the business partner. It's not an isolated immaterial exception. It's an exception. It's a control weakness. And it may actually end up in the audit report itself. At Wells Fargo, we actually took these 2 exception documents. And on the exception document, we made the decision as to whether we would write a formal issue and recommendation. Again, more to come in just a few minutes on issue and recommendations. Your source documentation. By that I mean, when do you include copies of your work, of what you saw in your work papers? Remember, the basic rule of thumb, the question you want to answer is, will any third-party person be able to re-perform the test and come to the same conclusions that the auditor did? Well, I definitely believe, and this is just best practice now, that you should include copies of some, not all, but at least some of the exception items that you noticed, some of the control weaknesses that you noticed, like documents that weren't approved. Here's examples, some samples of documents of what I saw. You know, when I said 10 of 45 were not approved, here's 2 or 3 of them of what I saw. You'll notice here there's no signature here. There's no approval. And if somebody wants to pull the other 7 or so, they can do that, because remember, I've got all of my sampling information included in that scope section of the work paper. If you can make an electronic copy, great. If not, you might have to have hard copies, like in an expandable file somewhere. But you do want some type of documentation related to the control weaknesses that you identified. So maybe you need to show those to a business partner at a closing meeting. Again, some evidence of what you saw that the control was not effective. Finally, at the bottom of the work paper, at the end of the work, you should conclude. The auditor needs to conclude on the results of his or her testing. Now, there's different ways to conclude on control effectiveness. Okay? Now, depending on your audit ratings, When I worked at Wells Fargo, we were on a 5-tier audit rating, 5 being the best rating a business could receive, 1 being the worst. So in the audit report, a business would be rated a 1, 2, 3, 4, or 5, which mapped directly to what you see here. Controls strong and effective, 5. Controls effective, a 4 rating. Controls generally effective, a 3 rating. Controls that are needing much improvement, a 2 rating. And controls that are totally ineffective, a 1. So at the end of the audit project, when we look back through our work, and if most of the controls were rated effective, we would probably rate the business a 4. If most of the controls were rated needs improvement, they probably get a 2 rating. You'll notice, and again, just to go back to the work paper here for a second, kind of what it looks like here at the bottom of the work paper is the conclusion statement. Oh, went right past it. Okay. You see the definition, strong and effective, effective, generally effective, needs improvement, ineffective at the bottom there. And basically we select one of those and a little narrative that gives us the rationale. The auditor gives their rationale for why they concluded strong and effective or why they concluded effective. So not just giving the rating, the conclusion rating here, but also some type of narrative that gives the rationale for why we're concluding this control is either effective or not effective or generally effective, whatever the case might be. Conclusion statements, obviously important. What is the ultimate conclusion with regard to the effectiveness of the control? Just some other fieldwork tips here. If you're the in-charge auditor, definitely want to make sure that your staff are communicating frequently with you. You definitely don't want to wait to the end of the fieldwork before you find out that we've got numerous control weaknesses here. I would say whenever the auditor identifies something that looks to be significant, you need to know about it. Because if you're the in-charge auditor, you want to be meeting frequently with the business partner, communicating issues with them. What are you seeing here? I mean, obviously, by the time they get the audit report, no surprises. By then, they know these issues. You told them about them verbally. You gave it to them in writing. You had a formal exit meeting, and now you're giving it to them in the audit report. They get it. They've heard about this. They understand the risks, and they understand the best ways to mitigate those risks. All right, common communication guidelines with the business partner. How frequently, am I going to meet with you once a week, or can I just knock on your door when I need something? Review notes as well. This is a mistake I've seen newer auditors make, and I just put this on here to emphasize something. If the in-charge auditor writes a review note on an auditor's work, remember that needs to be cleared back in the work paper, back in the test document, not on the review note. I've seen people where the auditor writes a review note and then the response is on the review note. The auditor clearing the review note says, oh, I picked an additional 10 items and didn't find any further problems, but the work paper doesn't reflect it. Remember, everything goes back to your work paper. Everything goes back to would a third-party person be able to re-perform the work and come to the same conclusions you did if you're the auditor doing the test. If you don't put your work in the work paper, a third-party person may have the same type of question. And finally, again, be alert to the red flags of fraud. Well, let's talk about kind of our last subtopic today in the webinar, and let's talk about issues and recommendations. Jim, before I kind of head off on this topic, any questions? Have any questions come up so far?
Nope, we're good to go. We have no questions coming in, but if anybody does have a question, please use the chat box and submit it, and Bill or myself will do our best to get that question answered. Thanks.
One thing I want to say before we go into issues and recommendations, I get lots of questions about issues and recommendations as I go out and meet with other audit organizations. And this whole topic today, and I think in all the webinars that we're doing here, is these are skills. These are skills that can be learned. I mean, sometimes in life I think we think if people don't have natural talents for certain areas, they just can't learn them. And that's certainly true for some things. But when it comes to internal auditing, I think almost all of the topics that we talk about are a skill that can be learned. And the good work paper, documentation guidelines that we just went through, and good audit evidence that we talked about is a skill. Not everybody possesses immediately, but you definitely can learn these if you keep some of these concepts in mind. I've seen people start out in internal auditing that, to be quite frank, were not very good auditors. But then, not too long after that, or maybe even a while after that, they learn these skills, not only the audit skills that we're talking about today, but the people skills as well. The skills we talked about in our Writing to Achieve Results webinar, the skills we'll talk about next week in our assertiveness training. Well, let's talk more about control weaknesses. Killing the spider, what does this mean? Well, a few years ago in the Internal Auditor magazine, and if you are a member of the Institute of Internal Auditors, you will receive every other month the Internal Auditor magazine. It has lots of good information. I highly recommend you become an IIA member. This is the professional organization for our profession. They had an article in the Internal Auditor magazine called Killing the Spider. And I'll talk more about what this here is in a minute, but it really got at that the big mistake many auditors make when they identify a control weakness is they just address the present condition. They just make sure that management fixes the present problem, but it doesn't really get at what caused the problem. It doesn't really get at the root cause of the issue. I mean, I don't know about you, but sometimes when I go to the doctor, I'll say, hey, doc, I got this pain in my side. And he'll say, well, take this drug. And I walk out of there, and I come home, and I say, yeah, I got a prescription. I tell my wife, yeah, the doctor gave me a prescription. She'll say, yeah, but why do you have the pain in your side to begin with? I'm like, well, I don't know. He just said, take this drug. He's treating the current condition, but he's not really getting at the root cause of the issue. I mean, the drug might eliminate my pain, but why do I have the pain, right? And that's the point here is you want to kill the spider. Well, what do we mean by this here? You want to provide recommendations that not only correct the problems, but also address the root cause of those problems. I think it's probably the biggest mistake we make in internal auditing. We make recommendations to a business partner that doesn't really get at the root cause. It's the difference there in the second bullet between cleaning up the spider webs, simply fixing the current problem, and ultimately killing the spider, addressing the root cause to mitigate future occurrences. And too often, we ignore those root causes. We simply, in the last bullet there, compare what the audit area is doing now, the condition, with what the policy states it should be doing. But we're not really getting at the root cause of the problem itself. And that's what this is all about. When I worked at Wells Fargo, we really took ownership for this. When this article came out, everybody received, I believe it was like a laminated copy of the article, and we had plastic spiders all over our walls in the audit department. I think any visitors coming in thought we were totally nuts. I mean, we must be Spider-Man or something. But we always explained to them what it was about. It really drove home the point of killing the spider, getting at the root cause of issues, and making sure people understood the importance of that if they worked in internal auditing. When I make a recommendation to a business partner, I'm not just going to address the symptoms. My recommendation is getting at the root cause, and especially when the business partner responds back to my issue and recommendation with their corrective action plan. Does it address the root cause of the problem? That's what this is all about. Well, if you sat in on the webinar 2 weeks ago on internal auditing basics, we covered the 5 components of internal control as defined by the Committee of Sponsoring Organizations, COSO. All right? And we said at that time that if companies are managing risks appropriately, there's 5 components of internal control that should be in place. A strong control environment, strong risk assessment activities, strong control activities, strong information and communication, and strong monitoring. Control environment, the culture of an organization, tone at the top of the organization, stresses the importance of risk management, the importance of internal control in making sure the company is achieving and helping the company achieve its objectives. Its culture, I said at that time, maybe it's the most important of the 5 components of internal control. Code of ethics comes into play with control environment. Risk assessment. What are the risks in my organization? What are the best ways to manage those risks? What are the risks that could prevent me from achieving my objectives if I'm the business partner? And now what are the best ways, how significant are those risks? And then control activities, what are the best ways to manage those risks? Information and communication, do people understand their control responsibilities? Do they know if controls, do they have good information that tells them if controls are working or not? And finally, monitoring, do they monitor their internal controls to make sure that they're working? Not only are they the best controls on paper, control adequacy, the design, it's the best possible design of control, and the controls actually working, control effectiveness. Start by looking at the business partner's risk assessment and control activities. Has there been an assessment of risk? Has management established policies and procedures, in other words, control activities, to address the risks themselves? Well, as I alluded to earlier, when the auditor is performing field work, when the auditor is testing the effectiveness of the controls, if the auditor identifies a control weakness, they should flag it in the body of the work paper. X1, X2, X3. Just to show you another test document here for just a second. Go to an actual testing section of a work paper. This is what it might look like in the body of a test. X1, first control weakness identified. X2, the second control weakness identified. X3, the third. In other words, number them sequentially based on, for that particular work paper. And then you start all over again in the next work paper. And remember what I said earlier? The auditor should make a call here as to how significant these control weaknesses are. This is what we looked at previously. Is this an isolated immaterial exception where I'm not even going to tell the business partner about? Is this a much more problem, much more significant control weakness where I'm definitely at least going to report it to them verbally? Or finally, is this the most significant level of control weakness? Back to the PowerPoint here. This will actually end up in the final audit report as an issue. All right? First bullet, no big deal. Second bullet, could be a big deal. I'm going to at least report it to the business partner verbally. Last bullet, big deal. It's going to go in the audit report. I'm going to give this to the business partner in writing during field work, and the business partner must respond back to me in writing with their corrective action plan. And remember, this is the critical part of this, does the business partner's corrective action plan get at the root cause of the issue? Again, back to my example earlier. Business partner is not reconciling their general ledger accounts. Okay? I go to the business partner and I tell them that. You know, I did some testing here and I noticed you're not reconciling. The business partner says, I don't care, I don't have time, you know, it's just not something I think is that important. Remember, first of all, to get them convinced that they need to have this control in place, I'm going to sell it to them based on risk, not on a policy. I'm not going to sell it my point of view on some that there's a corporate reconciliation policy, even though there is. I'm going to sell it to them because of risk. Here's what can happen if you don't have the control in place. Mr. Business Partner, we just had a $7 million fraud because a similar type of general ledger account in another area of this company, they were not reconciling. And hopefully by that point, the business partner understands the importance of having the control and agrees, okay, I agree, we need to follow the corporate reconciliation policy. But remember now, I'm going to communicate this issue and recommendation to the business partner in writing. The business partner must respond back to me in writing with their corrective action plan. Now, what should their corrective action plan look like? It needs to address the root cause of the issue. Maybe their corrective action plan states, I'm going to provide training on the corporate reconciliation policy to all my team members, and this training will be completed by October 31st. Me as an auditor now need to make the decision, does this address the root cause of the issue? If the cause of the issue was the reason that people weren't reconciling is because they didn't know about the reconciliation policy or they didn't understand the reconciliation policy, then that corrective action plan sounds great. It sounds like it would address the root cause of the issue. that training should provide them what they need in ultimately reconciling their general ledger accounts. By the way, one other thing before I move on here. Depending on your sampling policy, in internal audit you might have a formal sampling policy that requires you to select a certain number of transactions or a certain number of sampled items whenever you do a test. In some audit organizations, they'll have a tolerable error rate. In other words, it could be 5%. By that I mean, let's say I test 50 items, and I find 3 errors, 3 control weaknesses of the 50 I tested. If my tolerable error rate is 5%, now what's 5% of 50? 2.5, something like that, right? If my tolerable error rate is 5%, and now I've got 3 control weakness, which is more than 2.5, right? 5% of 50 is 2.5, and I'm already up to 3, and maybe I have 4 or 5. I cannot classify it as an isolated immaterial exception. I must at least report it verbally to the business partner, and it may well end up in the audit report. Just a little word of advice, you may want to establish a tolerable error rate in your audit organization to make sure everybody is consistent, all of the auditors are consistent in how they dispose of control weaknesses. You know, anything over the tolerable error rate at least requires verbal reporting to the business partner, and then we make the judgment call on whether it will go in the final audit report as an issue and recommendation. Reportable issues, again, when we do take it to an issue, it will be reported in writing to the business partner during field work and obviously in the final audit report. You know, you'll notice in the first bullet there, this is not a standard, but just a word of advice. You might want to flag the reportable issue as to its significance. I'll show you some risk ratings for reportable issues here in just a few minutes. You may want to flag it as to whether it was a repeat issue from a previous audit. That may have an impact on the audit rating. And certainly identifying the root cause and maybe the category of risk itself. I mean, maybe it's a credit risk issue. Maybe it's a operational risk issue. I mean, there may be certain categories of risk that you may want to assign to the reportable issue as well. I would recommend in the second bullet there that all reportable issues ultimately get approved, reviewed, and approved by the audit manager. I mean, if they're going in the audit report, the audit manager should approve these before you give the audit report to the business partner. Third bullet is what I've been talking about. You give these to the business partner in writing during field work. Either the auditor who did the test could do this, or the in-charge auditor may be doing this as well. I actually believe it's a very good practice to have the auditor who does the test write the formal issue and recommendation, and then along with the in-charge auditor, give the reportable issue to the business partner in writing after the in-charge auditor has a chance to review the issue. Again, it encourages development of our audit staff. They're taking ownership for their work from start to finish, not only for their test work, but the formal reporting of issues and recommendations. And the last bullet there is what I talked about, that we should get a written management response for any reportable issue. And again, look for adequacy as to whether the management response, the corrective action plan from the business partner, addresses the root cause of the issue. SAM, AIC, by the way, stands for Auditor in Charge, and SAM stands for Senior Audit Manager. I mean, audit organizations have different job titles, but again, specifically the lead auditor and the audit manager should be reviewing anything that goes to the business partner in writing. Just a couple other terminology things before we talk about issues and recommendations a little bit more. I would recommend that you formally validate the control weaknesses with the business partner before you put anything in writing. Now, what do I mean by that? If I'm the auditor doing the test and I come across a control weakness, I'm going to go to the business partner and say, hey, Mr. Business Partner, I noticed these 5 reconciliations were not approved. Should they have been approved? I mean, your policies here says that they should be approved. And the business partner looks at what I've found here and says, you're right, you know, I don't know what happened here. They should have been approved. Okay, I'm not asking for their response as to how they're going to fix this. I'm not asking for their corrective action plan. I just want to make sure we're in agreement we have a problem. Everybody with me on that? I just want to make sure that we're in agreement. I'm validating with the business partner that this is a problem. This is a control weakness. Ultimately, I will give this to them in writing if it's a formal issue and recommendation, and I will ask for a management response that you see there in the last bullet. But in validation, I'm just coming to an agreement with the business partner here that, do you agree that this is a problem, that this is a control weakness? Yes or no, before I go any further. Am I missing something here as an auditor? If I am, tell me now, before I start going down the path of writing this up and putting it in the audit report. The management response, again, must address the root causes of the issue. Look at the little sub-bullet specific responses that addresses all material aspects of the issue, has achievable target dates, not protracted. I don't want a date 2 years from now when they'll have this fixed. It should be, if this is a significant control weakness, as soon as possible, I want a corrective action plan completed here. Something that will prevent this from happening again, and people that will take ownership for this issue and for the related corrective action. Finally, just a couple things before I want to talk a little bit more about issues and recommendations. All of your audit evidence regarding control weaknesses is in your work papers. Always, always. If it's an isolated immaterial control weakness, it can stop in the work paper. You don't need to write a formal issue and recommendation, obviously, and you don't need to even report it verbally to the business partner. If you do use a separate document for non-isolated immaterial exceptions, and this is just an example in the third bullet there, what we called exception documents at Wells Fargo, that's where we'll develop the control weakness further and make a decision as to whether it will go to a formal issue and recommendation. If it does go to a formal issue and recommendation, we will put it in an issue and recommendation document, and I can just tell you audit organizations have different formats for that. We'll talk about this here in just a minute. And again, it goes to the business partner in writing. It should be reviewed by the auditor in charge, the supervisor of the audit project, the audit manager, before we give it to the business partner in writing. But now a key learning point from today's webinar. What constitutes, in other words, what criteria should be a part of every issue and recommendation? Now, I just want to make sure everybody's with me here for just a minute. This is the most significant level of control weakness. This is not an isolated immaterial exception. This is not something that we're just reporting verbally to a business partner. This is something that's going to end up in the audit report. We're going to give this to the business partner in writing during field work. The business partner is required to respond back to us with their corrective action plan, and both the formal issue and recommendation and management's response will end up in the final audit report. But now, what constitutes a well-written issue and recommendation? In other words, what we give them in writing should have a condition statement, a criterion statement, a cause statement, an effect statement, and a recommendation statement. Now, some audit organizations call these findings and recommendations. Same thing, all right? I just want to make sure everybody's with me here. This is the same thing. Issue and recommendation, finding and recommendation, same thing. Condition, criterion, cause, effect, recommendation. And I've always liked to think of these as a series of what questions. Condition, what's the problem? Management's not reconciling their general ledger accounts. Criterion, what should they be doing? Is there a policy we could cite here? Management should be complying with the corporate reconciliation policy. Cause, what led to this condition? What led to this problem, this control weakness? Management wasn't aware of the corporate reconciliation policy. They weren't familiar with it. Effect, so what? So what if management doesn't reconcile their general ledger account? So what if they don't have this internal control in place? This is the risk, okay? You can just put risk in parentheses. When I teach this in the live classroom, I write risk next to effect. If the business partner comes back to me, remember the example I gave earlier, I go to them and say, hey, Mr. Business Partner, you're not reconciling. They say, so what? So what if I don't have this control in place? So what if I don't reconcile? Will my effect statement sell my point of view? Remember, I'm always going to sell it to them based on risk. I'm always going to sell my recommendation, the last bullet there, based on the effect. Here's what can happen if you don't reconcile. We just had a $7 million fraud. And finally, recommendation, what should be done? Always remember, as you see at the bottom there, the recommendation should address the cause, the root cause. Kill the spider. But you always sell your recommendation based on risk, based on the effect statements. I can just tell you, if you haven't taken the Certified Internal Auditor exam, I'm an IIA instructor for the CIA exam review class. They test this over and over and over again. I'll show you some examples. We'll look at a couple CIA questions here in just a minute. Do you understand these 5 criteria? And they'll give you an example and they say, which one is missing? Okay? Condition, criteria, cause, effect, recommendation, all 5 attributes should be part of a well-written issue and recommendation. And, you know, I would recommend your recommendations are fairly specific. I mean, you don't have to tell the business partner exactly how to fix the issue, but sometimes they need that direction. Use your judgment here. Sometimes they need to be very specific. If you want a good management response back, if you want a good corrective action plan from the business partner that addresses the root cause. I mean, just to show you an example here, this is what an issue and recommendation might look like. Again, right out of one of our work papers. This is an issue and recommendation document, all right? That's part of our work paper package that we used at Wells Fargo. We had an issue field and a risk field, which is the effect, and a recommendation field. The condition, the criterion, and the cause always win in the issue field. Look at the right up here. Management is not reviewing loan files to ensure documents are approved and collateral is documented. We noted 5 of 45, 11% loan documents without proper approvals. 22% of these documents were also missing collateral information. There's the condition statement. The Wells Fargo credit policy requires all loan documents to be approved and collateral to be documented. There's your criterion. Management indicated they were not aware of the policy requirements. There's the cause. Condition, criterion, cause in the issue field. And now the effect. Lack of proper approvals and collateral information could expose the company to substantial loss. And I could have probably been much more earth-shattering with this, regulatory violations, etc. Because always, you want that to be the attention getter. You want the risk statement, the effect statement to be what sells your recommendation. We recommend management provide training to all staff members to ensure compliance with the Wells Fargo credit policy. These 5 attributes, condition, criterion, cause, effect, recommendation, should be part of every well-written issue and recommendation. Always, always. Okay? A series of what questions, if that helps you remember this. Well, let me show you some questions from the Certified Internal Auditor exam. I just thought you might find this interesting, hopefully even piquing your interest. I highly recommend you take this exam. It's the global designation for our profession. I mean, if somebody came to me and said, Bill, I need to get a certification, should I get the CISA? Should I be a CPA? Should I, get a CFSA? Should I get the CIA? And unless they were really sold on one, I mean, all of those are great certifications. I would point them to this one if they're an internal auditor. I mean, this is what we do. Anyway, look at this little example here. Right out of the CIA exam, and I took it actually from the study materials for the CIA exam. The IIA-CIA learning system, again, what the IIA has put out as a study resource for the CIA exam. So here's the question. We find that due to inadequate monitoring of cost-effective transportation and hotel options, the department's travel budget has increased steadily by a total of 1% per quarter, thus failing to achieve management's objective of reducing travel-related expenses by 1% over the same time period. Now the question, which of the following elements, remember the 5 components now of a well-written INR, which of the following elements is missing from the findings stated above? Is it criteria? Is it effect? Is it cause? Or is it condition? Well, let's see if we can identify these before we go to the answer. Look at the first sentence. We find that due to inadequate monitoring of cost-effective transportation and hotel options, that's a cause. this problem that we're about to state? Why? Because they don't have a monitoring procedure. That's a cause statement. So we can check off cause here. The department's travel budget has increased steadily by a total of 1% per quarter, thus failing to achieve 1% per quarter. Let me just stop there. That's a condition statement. That's the problem. Okay? We got an increasing travel budget because they're not monitoring. Now, what should they be doing? Failing to achieve management's objective of reducing travel-related expenses by 1% over the same time period. That's a criteria statement. So we've identified condition. We identified cause. We identified criteria. Again, in order, going back in the right order, we identified cause, we identified condition, we identified criteria. Which one is missing? Yeah, the effect. Condition, criterion, cause, effect. Now this is just from the issue. Obviously, recommendation needs to be a part of that as well. Here's one more, just to get you, kind of pique your interest for this. Again, right out of the study materials for the CIA exam. Late charges were waived on an excessive number of delinquent installment loan payments at the Spring Street branch. We were informed that late charge waivers are not approved by an officer. Approximately $5,000 per year in revenues is being lost. In order to provide a better control over late charges waived and loss of income, we recommend that a lending officer be responsible for waiving late charges and that this approval be in writing. Which of the following elements of a deficiency finding is not properly addressed? Condition, criteria, effect, or cause? Well, let's see if we can identify these again. Let's go sentence by sentence. Late charges were waived on an excessive number of delinquent installment loan payments at the Spring Street branch. That is the problem. That's the condition. That's the what is. That's what is the problem. That's a condition statement. We were informed that late charge waivers are not approved by an officer. That is the cause of that problem. Okay? Anybody can waive a late charge. There's no approval here. That's the cause. Approximately $5,000 per year in revenues is being lost. That is the effect. So we've got a condition statement. We've got a cause statement. We've got an effect statement. Which one are we missing? The criteria. A well-written issue and recommendation should always have condition, criterion, cause, effect, and recommendation. Always, always. Well, let's go to our last polling question today. Jim, if you want to open this one up, which of the following is not an attribute of a well-written issue and recommendation?
And the choices are condition, effect, validation, and criterion. Go ahead and take a little bit of time to read that over and promptly record your response. We'll leave the poll open for about a minute. And we have about 80% that have voted, so we'll leave it open for another 15 or 20 seconds. And we will go ahead and close the poll, share the results, and the majority said validation.
Great job, everyone. Well, just to wrap up today, the very last thing I just wanted to mention, and then I'll open this up for any questions you might have, is many audit organizations, after they write a formal issue and recommendation, will flag it as to its significance with regard to risk. Is it a low-risk issue, a moderate-risk issue, a high-risk issue, or a very high-risk issue? Now, there's a number of reasons that audit organizations do this. It could affect the frequency of the audit. In other words, will we audit this business much more frequently because of the severity of ratings that we've had? But I think more frequently what I've seen is it affects the follow-up process. In other words, if we have very high and high-risk issues in the audit report, we will actually go back and do test work once we receive once management has affirmed that the corrective action is completed. Okay? So management says to us, we give the issue, remember, the whole process here, we give the issue to the business partner in writing in Fieldwork. They respond back to us with their corrective action plan and the date that they assume that they're targeting to have the corrective action completed. All of this goes in the audit report. Once the business partner completes the corrective action, we go back and follow up to make sure that indeed they have corrected the issue, that indeed the control is in place now and effective and working. It's addressed the root cause, it's killed the spider. And all I'm saying is if we have very high and high risk issues, we typically go back and do formal audit work, just like if it was field work all over again. We'll pick a new sample and see if in fact we don't see any more control weaknesses. But if it's a lower moderate risk issue, we may not look at it again until the next audit project. If it's a very high and high risk issue, we may go back within, let's say, 30 days of the date that they completed their corrective action to make sure that the corrective action has addressed the root cause of the issue and the control is effective. Just a thought, again, many audit organizations rate their issues with regard to risk significance, and it can affect the follow-up process. With that, I just want to thank everybody today, open this up for questions. Again, my contact information, Jim's contact information is here as well. If any of you or your organizations are interested in me talking to you about coming into your organization and providing training, I teach a new auditor training seminar, an auditor in charge training seminar. Again, I'm an IIA instructor for the CIA exam. I teach writing to achieve results. I had a couple topics out of that seminar in our first webinar. And I teach the Ken Blanchard Situational Leadership 2. I'm a Ken Blanchard instructor for Situational Leadership 2, as well as my own Leadership 101 class around team building. 3 auditing seminars and 3 professional development seminars. I'd love to talk to you more after the seminar today. But with that, I'll open it up to questions. Any questions today?
Well, I don't see any questions coming in, Bill, so I think that you've covered the topic, and obviously everybody is sitting back and thinking how they're applying field work and how they're meeting the standards. And I want to thank you for putting on a great presentation today, and I want to thank everybody for joining us. Again, this is our Training Without Travel webinar series, and some of you people have opted for the no CPE option. If you want to get CPE for today's session, if you attended, then all you have to do is go to the AuditNet site, to the link for the Travel Without Training Internal Audit webinars, and we'll be glad to process that and make sure that you get your CPE. Again, the purpose of our Training Without Travel webinars is to provide you with high-quality, low-cost online alternative training solutions covering timely topics with value-added resources and tools that you can use in your job. We bring the world's best subject matter experts directly to your desktop with timely information. The next webinar in the Internal Audit Skills Training series will take place next Friday, and the topic of that is, let's see, assertiveness skills for auditors. Excellent. So stay tuned. You'll be receiving an announcement for this, and feel free to share that with your colleagues in your network. Again, we will be offering the no CPE option, and so please look forward to having you join us. Thanks again, Bill.
Thanks, Jim. Thanks, everyone.
Okay. Everybody have a great day. Bye.
Bye now.